Today we're taking a look at the three greatest investors of the 21st century and how they made billions of dollars, despite the fact that they were not born into money. We're going to discuss their individual investment strategies and what really made them successful. Make sure to stick around until the end, where we're going to reveal a bonus for the greatest investor, and the results might be rather surprising. The first on our list is no other than Warren Buffett. Born on August 30, 1930, Buffett is one of the world's most renowned and successful investors. His journey from a humble childhood to becoming one of the world's wealthiest persons is a testament to his financial acumen and understanding of the markets. The billionaire has been an active investor for nearly 8 decades, and his journey started at the age of 13 when Buffett took up his first job as a newspaper boy. Today, the 94-year-old investor, known for being the CEO and chairman of Berkshire Hathaway, has built an international conglomerate by investing into businesses with solid fundamentals and holding his positions over the long term. His investment portfolio includes some of the greatest companies of our time, such as the Coca-Cola Company, Apple, and American Express. Today, his net worth is estimated to be around $143 billion. His success is largely attributed to his understanding and adherence to the fundamental principles of investments.
He hasn't moved all day. He does this every few days.
Buffett has consistently invested in companies that have a competitive advantage, which would be difficult for other competitors to replicate. Buffett's investment philosophy emphasizes the importance of long-term thinking, avoiding short-term market fluctuations, and always keeping a margin for safety. His ability to find undervalued companies with potential for significant growth is what earned him the reputation of one of the greatest investors of all time. Some of my favorite quotes from Warren Buffett is, "Our favorite holding period is forever." And the stock market is a device for transferring money from impatient to patient. I guess this really prioritizes how much he focuses on long-term thinking. The second on our list is George Soros. Born just a few days earlier than Buffett, George grew up in Budapest and survived the Nazi occupation of Hungary. After immigrating to England in 1947, George earned a doctorate from the London School of Economics before embarking on a career in banking. Today, Soros is estimated to be worth $7.2 billion and has donated over $32 billion to charity. He's considered to be one of the greatest investors of all time and has managed a hedge fund which achieved 30% annual return from the years of 1970 to 2000. That's big numbers. So what's his investment strategy? You see, Soros is not an example of your average play it safe investor.
You can make 10 to 1, even 20 to 1 return, and it's already slowly going bust.
10 to 1, 20 to 1. No way.
In fact, he admits that he listens to his instincts more of the time when he makes an investment.
So you're offering us a chance to short this pile of blocks?
Nevertheless, he's obviously well informed and keeps track of economic trends on a regional and global level.
My math specialist, look at him. You notice anything different about him? Look at his face. He's pretty racist.
In fact, he once made a single-day gain of $1 billion by placing a short position against the British pound.
It was in excess of $1 billion of profit.
You see, at that time, England was part of the European exchange rate mechanism, which is an agreement between a number of European countries that they can exchange their currencies at a fixed rate. The other countries were pressuring England to devalue its currency or else leave the agreement. After resisting the devaluation for some time, England ended up floating its currency, which devalued the British pound.
It lost 15%.
Soros used this opportunity to place a high leverage bet of $1 billion against the British pound, which earned him $1 billion in just one day. This trade is considered to be one of the greatest of all time, which earned Soros his reputation of the man who broke the Bank of England. That's just crazy. And if you think that's crazy, Soros did it once again during the Asian financial crisis by betting $1 billion against the Thai currency. And that's how Soros was earned the reputation of the man who broke the Bank of England before he broke the Bank of Thailand. That's apparently no nation currency is safe from Soros. One of my favorite yet highly controversial quotes from Soros is, "It's not whether you're right or wrong, but how much money you'll make when you're right and how much money you lose when you're wrong." I mean, what do you guys think about that? And last but not least, we couldn't make this list without mentioning the legend Carl Icahn. Born on February 16, 1936, Carl has built a substantial fortune by investing in various industries such as oil and gas, automotive, and technology. Carl was the only child in a working-class family whose father even had to work several jobs to support the family. Carl attended the New York University to study medicine. Only after 2 years, he dropped out and joined the United States Army Reserves. Once discharged, Carl joined Wall Street and became a broker. He worked in several firms before opening his own, Carl & Company, with a $400,000 loan from his uncle. Needless to say, Icahn is known for his power moves. He purchases stock in undervalued and low-performing companies and then forces the management to implement new changes and increase shareholder value. I mean, it's not unusual for him to buy out companies that nobody wanted and then request a new board of directors or the sale of its assets.
Kendall, Frank, Asha, Alona, off the board, fired with immediate effect.
I don't think you're able to
Security!
This bold investment strategy is what got him the nickname the corporate raider. I mean, it's gotten to a point where folks at Wall Street came up with a term called the Icahn left whenever they would notice a company's stock price soar in value because Carl Icahn was likely behind that move. Honestly, that's a flex. I mean, his success story is amazing. Icahn went from just a regular stockbroker to one of Wall Street's most influential players. And the success story lies in finding undervalued companies, negotiating favorable terms, and forcing the management to implement changes. I mean, money buys everything. One of my favorite Icahn quotes is, "I'm like a gunfighter you hire to save a town." That gunfighter is there to do good. He knows he's on the right side and he's proud of it. But he'll only do what he does if he knows he's getting paid for it. Money rules the world! So what's the key takeaway to becoming a billionaire investor? You see, Carl Icahn, Warren Buffett, and George Soros don't share the same investment style. But one thing they do have in common is that they prioritize long-term thinking and avoid short-term market fluctuations. You see, big investors excel at fundamental analysis and they thoroughly understand the business that they're investing in. They focus on the underlying value of the company rather than immediate price movements. They're always on the lookout for companies that have a competitive advantage. And when they do find a company like that, they're not afraid to take big risks, even if that means that other folks at Wall Street will not do the same. This strategy is what causes a significant growth in their portfolio and one of the reasons why they went down as the greatest investors of all time. And finally, despite being in the late stages of their life, they're always on the lookout for changing market conditions and new industry trends, which ensures that their investment strategies remain relevant. Well, congratulations, now that you made it to the end of this video, I'm proud to announce that the fourth greatest investor of the 21st century is you. And that's because you invested your time watching this video. And if you want to make money but don't want to risk your hard-earned money, then listen closely. Propvator helps you find reliable prop firms that will give you access to a funded account, which means that you don't have to risk your own money. Just check out firms listed on propvator.com, check their challenge requirements, and pick the one that works for you. If you pay $65, you can get a $10,000 funded account if you pass the prop firm's challenge. Did I mention that Propvator also offers you exclusive discounts and cashback? Visit Propvator now to find exclusive deals on prop firms and have a good day.